Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 22nd of January. I'm Daniel Lam, your host for the podcast. Chinese New Year is coming up very soon, and I'm glad to hear from relatives that they will be visiting Hong Kong during Chinese New Year. And some of them said they have got gold jewelry gifts for my kids. So this also gives me a great excuse to check out the latest on gold, having concentrated much of my podcast effort this year on equities. So far this year, gold's price action has been slightly weak. This pullback is happening due to the rebound in US 10-year government bond yield, which was caused by some recent hawkish comments from Fed officials. This makes further comments extra important. We've been highlighting in previous podcasts that the 10-year yield may test the 4.2 to 4.3% level in the near term, which is likely to lead to further pullback in gold. Now, technically, gold is holding the lower end of its mild upward channel in place since the middle of October last year. But this relative strength indicator, i.e. the RSI, has been turning weaker, and momentum indicators, such as MACD and ADX, are starting to flirt with entering the bearish territories. So in our view, the short-term pullback would present some good opportunities for investors to accumulate on gold. Now on average, gold prices tend to gain 10% on an annualized basis during US rate cutting cycles since 1971, with some of the larger gains materializing during prolonged cycles. Gold positioning also has a tendency to price in rate cuts ahead of the announcement, and in some instances has priced in greater gains in the month ahead of the meeting announcing the first rate cut. So a pullback now is likely to improve the risk-reward in buying gold. Now we believe central bank demand is likely to remain strong this year, and it is an interesting hedge against meaningful recession and geopolitical risk. Interesting entry levels on the pullback would be 1972 and 1933. Very strong support is at 1809. Over a 12-month horizon, we see gold going to 2150. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.